Hello, 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 and welcome to all of you. We've got an exciting event to go through tonight. Lots of information. I don't know where you're coming from in the world. Let us know. Where are you coming from in the world? Let's find out from you what it is that you're doing, where it is that you are. I am in sunny South Africa. It is nighttime here. I have my fan on because it is so hot. It's the middle of summer. The weather is absolutely fantastic. So, jump in the chat box and tell me whereabouts you're from. It's always useful, always fun for me just to see where everyone's coming from. And with that, I would like to get started. So let's just check here. Is anyone here? I'm not seeing anyone telling me where they're coming from. So let's get some participation going. Shane, I can see that you're from Joburg. Shane's my partner. Paula from the Netherlands. Just taking a look through, seeing everyone, some familiar faces, lots of new faces, which is always fantastic. Perfect. Okay, so tonight we've got something really interesting to take you through. And what's interesting is that we try and do this sort of once every month, maybe sort of once every 2 months. And the reason being is that it's about going through the fundamentals. So we've got different classes, different things we teach people. And at the end of the day, what we're trying to do is share the fundamentals, share the pillars, share what's really important when it actually comes to investing in terms of the overall process. So what are we going to be going through in this session? And, you know, some people say, well, what's the difference between this and the challenge? This is a more consolidated version. And this is specifically, you know, focused on a specific type of individual, which you can now decide in the near future whether you resonate with that person. So I always like starting off at the beginning with a question. Because I think what questions do is they get you in the room, they get to, you to start thinking. So my question to you is, what would it mean to you in 12 months or less to be earning at least $5,000 passive income without any hassle or complexity? So just take some time and think about that. My second question, how would you like a system which can statistically help you get there 5 times faster, simpler, and safer? So that's it. Think it through. It's obviously personal in terms of, whether it would be important to you. But I'm a very, very big believer in making these things personal and making them, real and tangible for yourself. And so let's get going. Who here would like to meet Jordan? Now, we're all in the world of artificial intelligence, and who knows, us humans might be extinct in a couple of decades, but for now we're not. So we can still have a bit of fun. But let's just say that Jordan is my artificial intelligence friend. Now, who is Jordan? Jordan is a 55-year-old high net worth individual. He's worked very hard all his life. He wants to build a portfolio. So an international, globally diversified portfolio, and he wants to ensure that his wealth is persevered. What else about Jordan? Well, Jordan wants to build a globally diversified passive income of at least $5,000 a month, but maybe $10,000 a month, or maybe he'll even dream to be $25,000 a month, simply and safely. He wants to diversify his investments across countries, currencies, and assets. He wants to use his limited time, he's very time poor, to get effective results with predictability. He wants to save decades of frustration and millions of dollars and get the right knowledge for him and his family. He wants wealth protection, a plan B, and peace of mind. He wants to be held accountable. Most people know that if they want to get something done, they need to have an accountability partner to get that result. He wants to have a family office to help him manage all his financial affairs. He spent many years going to lots of different financial planners and financial consultants, but no one could ever take his whole view in a consolidated approach and give him the financial management advice and one-stop shop thinking that he's been looking for decades. He wants to create generational wealth for his family. And finally, he wants to have a fully completed, executed wealth plan an investor strategy sheet, and he wants to get results. Now, a show of hands. Who here can relate, man or woman, he or she, and all the other pronouns that I should be using, who here can relate to Jordan? Who here is in a similar situation to Jordan, with similar needs, similar wants? Just say, yeah, no, I'm always interested in terms of what people's opinions are. But Jordan is going to be our artificial intelligence friend. And he's going to be helping us on this journey tonight, as he shares, and as I share, some of the fundamentals. And then what he's going to do is also help to share his own experiences of what it's been like actually achieving the below. So if this is something that resonates with you, you know, what we believe in is to live a life unlimited. And how do we do it? Through Diversification 5.0. And if you'd like to kind of review your investment goals, and if you'd like to analyze, you know, whether or not you're similar to Jordan, we've got a small survey to take you through that can literally ask you some pretty pertinent questions. We're right at the beginning of 2024. Why not fill in that survey and start to discover what are your needs? What are your wants? Because the more that you use the tools, the more you're going to get clarity. And the more you get clarity, the more you're going to find solutions to turn Jordan's needs and wants into your needs and wants. Is that fair? Yes or no? Just give me a yay or a nay. I'm going to have a quick sip of water while I ask that question. So there's the link. I can see Shane has kindly put it in the chat box for you. Ah, thanks, Alex. Give me 2 seconds. I just need to plug my laptop in there. First lesson of tonight, teamwork. So thank you, Alex. It actually was plugged in on the laptop side, but I forgot to plug the plug-in on the what's his name side. Werner's saying I should take my jacket off. I am considering taking it off, Werner, but you know, tonight's a more sophisticated presentation, and you know, on behalf of Jordan, I'm going to attempt to leave my jacket on, but have the fan going. So anyway, there's the link if you want to go through it. So I want to start with a story, and it's important. Sometimes people have heard my stories, but it's actually really, really important to kind of take the essence of what these stories are about. There were 2 brothers, and the first brother decided to leave Zimbabwe in 1976. He was very reactive. He was worried about the country. And so he literally got in a car with his wife and children and drove to Durban, South Africa. In those days, you couldn't take anything out of the country other than what you could fit in the car. And so they had a, whatever this car is called, I can't remember, it's a Renault or Morris Minor or something. And they literally drove 1976 down to Durban. And he continued to live a life of reaction. He was a farmer in Zim. He had to become an accountant in South Africa, and was always susceptible and reacting to what was happening in the economy, what was happening politically, and it didn't end very well for him. We'll talk about that a little bit later. But a very reactive position. The second brother was far more proactive. You know, in 1980, also in Zimbabwe, he decided that it was time to start. He didn't want to leave Zim, but he wanted to start investing offshore. So he started buying first world assets and starting to earn a first world income. And in 2003, he decided it was time to leave Zimbabwe for his child. His child was 7. They moved to Australia. Against what most people understand, over the age of 50, he bought his way in to Australia. He bought his house for cash in Brisbane. He sent his kid to one of the best private schools in Brisbane called Churchie, who subsequently went on to row at many of the top universities in the world. And the best part is, in my opinion, is he didn't have to work for an Australian. And why I tell this story is I always say, which one of the 2 brothers would you want to be? The reactive one that's at the mercy of the government, the politics of the time, the economy or whatever, or the proactive one that has the ability to make the decisions that they want, to have the freedom of choice as to where they live, where they send their kid to school, who they work for, what they do with their time. And the difference between the two of them is that one was proactive and the one was reactive. The second brother didn't necessarily have that overnight. In fact, it took 23 years worth of planning. But the first brother never did it. And probably, like many people, had lots of excuses. So which one would you rather be? The first brother, the reactive one, or the second brother, the proactive one? I'm going to keep asking you questions all night, by the way. It's how I do this on purpose to engage. So if you're watching Netflix, reading your emails, dealing with your Facebook or your WhatsApp, maybe it's time. Maybe, just maybe, it's time to invest the next hour and a half to 2 hours in your future. So this was the reactive brother. It was my father. And what I found very, very interesting is that this was the very first property project that I actually worked on. I was 13 years old. And, you know, as I watched my dad did everything we were told to do. He went to school. He worked really hard. He went to university. He got a great degree. He became chartered director or financial director of a listed company. And yet when he died at the age of 59, he died broke. And I remember looking at that and going, that's just crazy. Like literally, he's doing what everyone told him to do. Work hard, get a good job, get a degree, invest your money, pay your taxes, and don't worry, everything will be hallelujah, tra-la-la. Well, rubbish. I then went and did the research learned from a guy called Dr. Ernest Strayer. And interestingly enough, 94% of people in England, Australia, and America at the age of 65 are dead, broke, or reliant on the government. They're pretty much the same as my dad. 5% of people are financially independent. And again, a lot of people go, yeah, pick me, I want that. But actually, they earn 25% less than their last paycheck, which basically just means they are financially trapped. And then finally, 1% of people retire wealthy. So literally 1% of people go out there and, you know, finish the race. 100 people start the race, one person finishes it. And I just remember at a young age going, well, that's ridiculous. Like, I'm not following that system. It doesn't make any sense to me. And so I went out and I read a book called Rich Dad, Poor Dad. And I'm sure there's many, many other people that have read this book. And he talks a lot about the cash flow quadrant, the E, the S, the B, and the I. And without going into this in a huge amount of detail tonight, you've got the employee in the top left corner. You've got the self-employed bottom left corner. And these people, you know, this is all about active income. This is all about being on the treadmill, working, large debts, insufficient funds. 95% of people on the planet are in this state and have less than 5% of the world's wealth. Then on the right side, it's all about passive income. So you've got the business owner and you've got the investor. And what tonight's all about is this investor. I don't care if you're highly sophisticated in one particular country. The chances are you would like to be a global citizen. You would like to be globally diversified and have globally diversified passive income. And so the question is, how do you get there? And it brings me on to myth number one, because what I've learned over the years is that for 14 years, I went out and tried to do it all myself. You know, I just read books after books after books, and I've just got a few of them here. I've got, you know, hundreds of books in my book cupboard. And I went on courses. I did 2 degrees, an honors degree cum laude in property, a master's degree cum laude in construction, property, and technology from London University. I did CRS in America, which is Certified Residential Specialist, which is the top property course in America. I did PDP in South Africa, which is property development program, the top one out of the business school in South Africa. I did ARPP out of England. And again, I'm not telling you this to boast. I'm telling you that for 14 years, I thought I had to do it all myself. I thought I had to get all the knowledge myself. I thought that I had to figure it all out. And then finally, when I'd figured it all out, I would go out there and do it myself. And, you know, it's so interesting because this book here, Real Estate Riches from Dolph DeRuis, he said, you know, go look at 100 houses, make an offer on 10, get accepted for 3 and buy 1. So I did. I went out and bought 16 houses. And, you know, what's interesting is I thought, well, you know, once I get to that number, I'll be free. What a load of rubbish. because all that happened was my complexity went through the roof. I was just on a meeting this afternoon. I'm going to talk about one of my London properties, bloody talking about Sky and sorting out the rubbish and the drama with that. And so I did all the theory. I actually practically implemented, which is unlike most people, and I still didn't get that passive income and that freedom. And so for me, the myth was that I could do it all myself. Where did it all start? Well, back to that project when I was 13 years old, I renovated our house and we basically put on a double bedroom ensuite bathroom. I then did my first project when I was 22. I bought a house and we renovated it into 6 townhouses. I did my first London property when I was 24. We bought a terrace property and converted it into 5 bedrooms. And from there, at the age of 25, I started a company called IPS, International Property Solutions. And we help thousands of people invest in South Africa, hundreds in the UK, hundreds in Australia, and hundreds in America. And over the time, and 2,500 investors, I started to realize a bunch of patterns. And one of the biggest ones was that most people, if they were buying houses, were stuck in country. So firstly, it was very difficult to invest outside the country. Secondly, there were massive barriers to and hassles to investing in commercial property and or international property. And that didn't even take into account the complexity of tax and structuring and all of those very difficult areas. And for that reason, 99% of people were not investing like the top 1%. This became a stark reality to me back in 2008, 2009. We had the crash in the world, the global financial crisis, and there was a company called Barrett Homes, and a bunch of the developers were actually in trouble at the time. And there was an opportunity to buy 48 units off them at a 40% discount. They were fully tenanted and fully furnished. And I actually wrote this email to all of our investors. And I literally went, I don't care what happens with market values in the short term. This represents a real opportunity. We could buy them for £160,000 each at the time. And I don't know if you want to give it a go. Put it in the chat box. Tell me what you think they're probably worth now. Anyone want to hazard a guess? It's whatever, 2008, 2009. So what? It's 14 years later. 4 million. Not quite. Not quite. I wish, but not quite. You're looking at probably in the region of about £750,000. So your money would have quadrupled, and you would have had positive cash flow income the entire time. It's kind of a no-brainer. And it was in Wimbledon, which is a very, very good area in Wimbledon, in London. Now, the challenge was I needed to raise £10 million. I tried quite hard. I went around to our 2,500 investors, and I just couldn't get people to work together. Then in 2009, I met 2 very wealthy businessmen. I said, what are you investing in? And they said, well, medical buildings. And I said, oh, really? I haven't learned about that. Why medical buildings? They said, think about it. No matter what happens in the global economy, people need doctors. Secondly, doctors never leave their premises. And thirdly, doctors are very good at being doctors, but they are not accountants. And so they literally, sign very good long-term, very favorable leases. And I remember thinking, that's an absolute no-brainer. How do I participate? And they said, no problem. It's $40 million. We're doing 8 tranches of 5 million each. So again, I ran around to all our investors, and once again, I had no luck. And so those 2 things created enough pain that we went out and we created Wealth Migrate. And the reason we did it was that we wanted to bring people together to have the power to invest like the institutions. And we did our first medical commercial building in 2014, and we actually bought 6 buildings in one portfolio. It was worth $16 million, and we had 82 investors from 5 different continents. And over the time, I'm not going to go into all the details, but a lot's changed and happened in the last 10 years. We've now got members in 178 countries. We've facilitated over 1.3 billion in terms of investments, et cetera, in terms of paying out over $30 million in dividends and exits, et cetera. So whether you want to invest in America, England, Europe, Australia, or even South Africa, I don't believe people need to choose anymore. The question is, why do people diversify? And if I look at thousands and thousands of people that I've helped, there's a couple of core things that don't change. Number 1, they want to preserve their wealth. Number 2, they want a plan B. Number 3, they want peace of mind. And number 4, and probably the most important one, they want freedom. They want freedom of choice. And so we live in crazy times at the moment. If you take the last 2 years, and I'm even talking post-COVID, we've got the war in Ukraine, we've got inflation going to 40-year highs, we've got interest rates going up, we've got fuel prices going up, we've got the stock market up and down and all over the place. In South Africa, we've got load shedding. And if it wasn't all exciting enough, Israel and Hamas have decided to have, all of the drama that's going on, including more recently what's going on in the Red Sea. And that's why we believe so strongly in Diversification 5.0. Now, having helped thousands of people for over 2 decades, I would have to be fairly stupid not to spot patterns. So I'm not intelligent. I'm not saying I've figured out the secret key. All I've done is watch thousands and thousands of people, and specifically the sophisticated investors. I've watched what they do in difficult times. And it's very, very important, because what I've realized is that if you take sophisticated investors, there are 5 things, 5 patterns which are repeated over and over again. And if we're in difficult, challenging times now, it won't be the first time, and it definitely won't be the last. And so what are those 5 patterns that people look at? And what do you do from an investment perspective? Well, based on those 5 patterns, we created Diversification 5.0. We believe the way to protect your wealth, to have a plan B, to create peace of mind, to have freedom, and ultimately to have globally diversified passive income, which sits right at the middle, is to diversify across countries, currencies, assets, partners, and time. And so just before I get started in sharing the 5 patterns with you, I also wanted to share with you something that Alex and I laugh about all the time. Because I have people all the time saying, Scott, I came to this event, I watched you, I saw this webinar, I watched you, I came on this podcast, I came to whatever. And so the pain of not taking action is tremendous. And I just wish, and the intention of tonight is to help more people take action and get results. Because you might even recognize yourself in these pictures. I've done hundreds of breakfasts and hundreds of webinars, thousands of webinars, spoken to tens of thousands of people all over the world. And yet so many people have heard about it. And it always amazes me how few people actually take action and do something about it. Whether it's sitting on panels with Brian Walsh and Roger Hamilton, sitting at campfires on our wealth weekends with some of the wealthiest investors, or even our retreats, whether it's webinars with Clem Sunter or Dr. Dolph DeRuis or Neil Peterson, all of them over and over again, there's significant pain for people that haven't taken action. And if you look at Harvard, what's interesting is that even tonight, 3 months from now, unless you take action, you will not even remember 10% of what I'm going to share with you. Not even 10%. And yet, if you take action, and particularly if you learn while doing, I'm going to share with you how you can do that. You can be up to 95%. It's a fundamental difference. And so people often move 4 times more away from pain than they do towards pleasure. So let me give you the other side of that fence. I had an investor and he was getting about a 7% return. And I said to him, over a 10-year period, if you could get that to a 15% return, he only had $12,000 to invest. The difference over 10 years would be worth about $57,000 in today's money. And I basically said, is that painful enough for you to finally take some action? Because he told me he'd been following me for 10 years and done nothing. So that's why we built the mastermind. And I will share with you later what that's all about and how we help people go through that journey. But without further ado, I want to go into those 5 trends. I want to go into those 5 pillars that we have followed and learned, and patterns that we've learned from the most sophisticated investors that we've dealt with from all over the world, and what they do in trying times. So it's trends, risk, diversification, structure, and team. Let's go into them. Trends. So the first one is trends. And this one I find really interesting because, when I wrote this book, Property Going Global, James Painter did the entire chapter 2. And it was all around currency and trends and forecasting. And just like the weatherman, he helps us make better decisions about the future. It was interesting. He was giving a presentation to some of our mastermind members. And he literally said, if you look at the stock market, there's quite a good probability that the stock market could lose anywhere from 50 to 80% over the next 10 years. Interesting. It's not an opinion. It's based on trends. Someone else that I would highly recommend that you follow is Ray Dalio. Now, he's got a book called Principles. And what's fascinating is that Ray Dalio talks about overall. So if you see on the left-hand side here, you got growth, and at the bottom, you got time. And he says in the middle, you got productivity, which is consistently rising or should be. Then you've got short-term debt. So he talks about multiple cycles. You've got the short-term debt cycle. Then you've got the long-term debt cycle, 75 to 100 years. And what's interesting is that they're all correlating. In this decade, they're all correlating together. The short-term debt cycles correlating, the long-term debt cycles correlating, the political, economic, and stability cycles are all into the social change, and even down to the world currency, the US dollar, the reserve currency, is all happening all in this decade. So if you want to know trends, what I love about Ray Dalio is he doesn't argue opinions. He goes on data. He went back 500 years and he looked at all the trends and all the data. And he shared it in his book, Principles, plus he's got, you know, you go read all about it on LinkedIn. If you would like something that I did for our wealth hackers, is I took Ray Dalio and I summarized all the information into a 90-minute wealth hack. And if you're interested in that, just type in there Ray, and we'll share it for you. It's one of those things. I like to give away gifts to people that have turned up live. So yeah, if you want that, I can save you. His audio book's about 19 hours. It took me, you know, probably 2 days of researching everything just to put together that presentation, along with obviously reading the book. So that's the book Principles, which I would highly recommend. So let's go back to trends. And what's interesting, when I take the 2008 crash, the world was falling all over the place. Banks were going out of business. AIG was going out of business. Everyone was in a complete and utter panic. And if you go back to London, everyone was running away and I was running in. And what's interesting is that most people look at cycles and they say, oh, well, the property market's crashing. You know, in London, it dropped 20% in about 3 months. And everyone goes, oh, panic, panic, panic. But what they don't look at is the long-term trends. Things like supply and demand and the fundamentally important drivers of economics. And so they get caught up in this tiny little process here, and they don't look at the long-term trend. And this starts to have significant impact on their investments long-term. I'll give you an example. This was a building that we helped 32 investors invest in back in late 2008, beginning of 2009. What was interesting is there was a gentleman called Don that bought 4 units, and he bought each unit for £313, £13,000 at a 26% discount. The building was complete 2 years later in 2011, and he earned a positive cash flow income for over 10 years. And in 2021, he sold each unit for more than £1 million each. Now, who here would like to buy a unit for £313,000 and 10 years later sell it for more than £1 million? Yes? No? Sounds too good to be true? I've heard it all before. So then the question is, well, how'd you do that? Trends. If you look at it, we bought in City Peninsula, which is right next to Canary Wharf. It's effectively Greenwich. It's one stop from Canary Wharf, which is the financial capital. And there was massive infrastructure being built in the area. You know, this article came out in 2 years ago in 2021, and it said there's £8.4 billion, $10 billion being invested in Greenwich Peninsula. And that was just one company. There was 17,500 homes, 84,000 square meters of commercial and retail space, 20,000 square meters of cultural attraction. Can you start to see that when you've got these trends pushing a market, then you've got a pretty good probability of getting a result? Another example, Ryan Boyder came to me in 2009 and he bought 5 properties in Australia. And he didn't buy a home, he didn't buy somewhere he wants to go and live. He bought the most effective economic properties, which are mom and pop, you know, 3 to 4 bedroom homes with 2 bathrooms that you can rent to the average Australian, husband and wife and 2 kids. And he bought them in the 2 cities that are the highest growth, Melbourne and Brisbane, and in the suburbs. And what was interesting is that 5 years later, he retired to, not retired, but he moved to Australia, immigrated to Australia. He sold those properties. He now lives on the Gold Coast in a big fancy house, and he was completely set up. But back to trends, the Australian property market in 2009, 2010 was the best performing property market in the world out of the G20. And he wasn't just in the best market, he was in the best subsectors, Brisbane and Melbourne, and in the best asset classes in those subsectors. Trends. What about Michael and Lee Honeysett? You know, Michael was just like you. He was on a webinar, he came to a live event. You know, I said you should come on a buyer's trip. He wanted to start to get globally diversified passive income. And he was very skeptical. He was like, I don't know about you guys. And, you know, to go on a buyer's trip, you had to pay a deposit, and he didn't want to pay the deposit. And I was a bit confused because, if you can't afford the deposit, why would you even want to come on a buyer's trip? Anyway, he actually did. And I remember when he was there, he was very, very clear with me that he wanted to set himself up for his daughters. He wanted to make sure that he had enough passive income so that they could live in any country they wanted. They could study in any country they wanted, but ultimately that they had the freedom. And it was very interesting for me because he had absolute clarity. So he came in in February of 2013, which was right at the bottom of the American property market, just at the bottom of the crash. And he bought a number of American houses. And he rode that market as the American market really rose. And at the time, the Rand halved. So the Rand halved and the properties doubled. And he enjoyed the benefit of that. And he literally said, when I joined, it was the best money I ever spent. And it would never have happened if I tried to do it myself. So again, trends, 3 different countries. If you get it right once, you're lucky. Get it right twice, who knows? If you're consistently getting it right, it's because you're getting the right information, you've got access to the right partners, and you're following the trends. So when I wrote the book, Property Going Global in 2013, that was endorsed by Clem Sunter, I took his model of scenario planning, and I created a 4-dimensional model. And in this book, I talk all about it. But I basically went and I showed people how we do it. And I literally showed them when we started investing in Australia, when we started investing in England, when we stopped investing in England, when we started investing in England again, and when we started investing in America, literally at the bottom of the market. Now, if you would like to get access to this book, Property Going Global, just type in their book and we'll find a way to get it to you. It is 10 years old now. I did write it evergreen. I kind of hoped it would last forever. But, the world changed. I've changed. My knowledge has changed. But I'll talk to you a little bit about that just now. And what's interesting is that if you take 25 years worth of research, according to the regulator in America, the stock market has got you about an 8% return. Okay, so you can see the gray. Okay, and private equity has got you about a 12% return. And we, over the last 10 years, in the kind of the alternative asset space, have got about a 14% return. If you take risk on the other side of the fence, the stock market has had higher risk in comparison than with private equity. And I find this very, very interesting in terms of the overall process. So back to my book. 10 years later, my partner Shane came to me, and I had a whole bunch of people, hundreds of people, say to me, Scott, it's time to write a second edition. And I was like, nope, I got no desire to write a second edition. I hated writing the first edition. But I'll tell you what I'll do. And Shane was the architect behind this. Why don't we create a digital course? Why don't we take the book and we have a 10-year upgrade? And so we not only, upgrade the residential side, because that book was primarily residential, but we started investing in commercial in 2014. We started investing in other alternative assets in 2019. There's been a massive advance in technology over the last 10 years. And so we built this course. It's a home study course. It's called Wealth Going Global. And literally it's 6 modules. It helps you choose the top 5 countries to invest, the top 5 currencies to invest. That's done with James Painter. The top 15 assets to invest in, how to find the right partners and avoid the mistakes that 80% of other people make, how to build a portfolio over time, and ultimately how to use technology in terms of that overall process. So if you're interested in Wealth Going Global, just type in there WGD, and we can let you know the details of how you can get access to that home study course. Because one of the things that I always joke with is that, no one ever read my book. other than my mother. That's a lie, but you get my point. Because most people don't read a book and then actually go and action it. So what Shane's done so incredibly is he built Wealth Going Global, and you walk away with tangible results. You walk away with a wealth plan. You walk away with an investor strategy sheet, so that you're not just learning, but you're actually doing. So anyway, that's Wealth Going Global, WGG. But as you can imagine, that tonight, and often when I do these masterclasses and even the challenge, I'm just touching the tip of the iceberg. I'm literally trying to give you the important lessons. But if you really want to get below the iceberg and you want to see the substance, that's where things like Wealth Going Global are there to provide you with that substance. So just please be aware in that in terms of understanding. Clem Sunter, Clem Sunter is the most amazing guy one of the most amazing guys I've ever met. He's one of the top 5 strategists in the world. He's worked at Harvard. He's worked for the Beijing, government, the Chinese government. He was in South Africa, helped with democracy. He was chairman of Anglo American, et cetera, et cetera, et cetera. Incredible guy. And he actually wrote chapters 3 and 4 of my book originally, and actually endorsed the book. And when we did Wealth Going Global, he actually gave us, I got him in and I interviewed him, because I don't know about you, but I don't like going and doing, trying to read the book and reading hundreds of articles and trying to find out what the latest probabilities and scenarios are. So I interviewed him, and one of the things I think I'm quite good at is synthesizing and asking the questions, so that rather than reading and spending hours and hours and weeks watching all his presentations and trying to read all his articles, you just get the information in one place. And so we did that, and it's a bonus module within Wealth Going Global. So anyway, I think you get an idea of trends, and hopefully we've shown you where to get the information if you want to learn about trends. Number 2 is risk. Now, I learned this from Warren Buffett and from my uncle. So what was really interesting, again, back to the crash in 2008, the world was falling apart. The banks were falling apart. I remember Barclays Bank was about to go bankrupt. And my uncle, I remember phoning him. Now, you've heard about him. He's a successful stockbroker and done really well in the investment space. And I said, Bill, what are you investing in? And he said, Coca-Cola. And I was like, why Coca-Cola? And he said, well, think about it. They're diversified in over 100 countries. They've got multiple different products. And most importantly, they pay a very good income. They pay dividends, a very good income. I was like, wow, okay, that's really interesting. Sure as anything. A couple of years later, I'm reading a book called Snowball, which is Warren Buffett's book. And exactly the same thing. He owns like 15% of Coca-Cola. And I was like, wow, big and very important lesson. So how do you manage risk? And the answer is you focus on income. So most middle-class people and professionals are focusing on capital growth. They try to go buy a house and they hope the house goes up in value. They buy Bitcoin and hope that Bitcoin goes up in value. They try to buy shares and hope shares go up in value. But wealthy people invest for income. And the first time that I learned this was back in 2001, 2002. So we had September the 11th. England was going to war with Afghanistan. Oil prices were going up. Inflation was going up. Interest rates were going up. Oh, wow. Bit of deja vu, don't you think? Sounds just like we have right at the moment. Anyway, my mate and I wanted to buy a house. And all my mates were, buying arguably fancy apartments. I said, no, we don't want to do that. We want to buy a 3-bedroom house. We want to renovate it, put a conservatory on, turn it into a 5-bedroom house, and we can immediately increase the rent. And we'll have £1,000 buffer, cash flow positive, so that even if costs go up, we're protected. Well, anyway, 20 years later, we still own this property. This was the one that I was telling you that they were bitching about, the Sky, which is like DSTV the other day. Yesterday and today, I've been trying to sort that out. There's still hassle to residential property. The point of the story was that I learned through that story that when you got income, you can ride the storm. A lot of my friends bought apartments 2006, 2007, and there was all the big fancy apartments hoping for capital growth. And then you had the global financial crisis and they lost their bacon. So when you go after capital growth and winter comes, it's like betting against winter. It will arrive and then you're in trouble. Whereas if you go after income, you can ride the winter. I learned it again when I went to America and we were buying medical buildings. And I asked the Americans. Now, I remember property in America in the last crash dropped anywhere from 40% to 70% in some cities like Las Vegas. and yet medical buildings just kept paying every month. And so people don't really care what happens to capital value in the short term, because they know long term it'll take care of itself and the income keeps coming. It's a fundamental mindset shift to manage risk by focusing on predictable income. And more recently we had COVID and everyone's running away from office buildings, and there's a company in America called Feldman. They've been doing this for 40 something years. They've got $3 billion dollars under management. And we bought a building right in the heart of COVID, like December 2020, at about a 9% income return. And to this day, this building is paying over 9% income. And they got it at a great price because everyone else was running away. But it was all about the income. And so another lesson, Hilda Lunderstedt came on a buyer's trip in 2013. She was a successful business lady, and she wanted to start to get international passive income. So she came to America, she started investing in the commercial properties. And in 2019, 2020, I don't know what year it was exactly, she immigrated to America. Funny enough, I saw just in the last week, she's finally got her American citizenship. And she said it was a 10-year dream come true. And what's fascinating is by investing 10 years ago in 2013, that enabled her the passive income to finally make the jump in terms of that process. And just by the way, this was a picture of her with Richard Branson. I was with her on Necker Island, and actually introduced her to Necker Island. We spent a week with Richard Branson on Necker Island together. Okay. Number 3, diversification. So Ray Dalio, one of the most successful investors in the world, says that the single most important component to financial success, type it in the chat box. Let's see if you know, and I'll have a sip of water in the meantime. What do you think the single most important component to success is? Krishna, well done. Diversification. Alvin, you're right. Mark, compounding interest. Rocky, diversification. Celeste, diversification. Richard, diversification. Well done to all of you that said diversification. The single most important component to financial success is diversification. You must diversify across asset classes, within asset classes, across markets and time, and currencies and across time. And he went on to actually say that, what was interesting in this book, where's it going now? These 2 books here. So Money Master the Game, and this one, Unshakable. So Tony Robbins was so disappointed and so frustrated that 10 million Americans lost their homes in that crash of 2008, 2009, 2010, that he went out and he said, right, I'm going to interview 50 of the wealthiest people in the world, and I'm going to turn them. So what Tony Robbins is incredible at doing is taking the information and making it simple and easy, spotting patterns. And so he actually interviewed Ray Dalio, who was in his 70s. And by the way, Ray Dalio has achieved a return of over 20%, 21% to be exact, year on year for over 40 years. Now, if you're managing $160 billion to get a 20% return on average, 21 to be exact, over 40 years is incredible. And he said, share with us your secret sauce. And at first, Ray Dalio was like, no, that's our secret sauce. That's our intellectual property. He said, come on, you're in your 70s. What do you got to lose? And so he did. And his secret sauce is 15 uncorrelated bets, an attractive array of assets that don't move in tandem, will reduce the risk by 80% and increase the risk-return ratio by a factor of 5. And I know that when I've read that hundreds and thousands of times around the world, people go, I don't know what that is, gobbledygook, oh my word, I'm in trouble. No, not at all. It's actually really simple. All he's saying is invest in 15 quality assets that don't move in tandem. That's it. That's all he's saying. 15 quality assets that don't move in tandem. If you do that, you'll reduce your risk by 80% and you'll increase your risk return ratio by a factor of 500% to be exact. Now, which investor here would not want to reduce their risk by 80% and increase their risk return ratio by a factor of 5? Anyone? Which investor here would not like to copy a formula, literally copy it from someone that has got a 20% plus return year on year for 40 years through all the markets, up and down? Yes, no, it's just me. Am I the only one who wants to copy? Like, why figure it all out yourself? When someone else has done it for 40 years, surely we can learn from it. And so here's a little clip from a TED talk that he did, which summarizes him talking.
So what the individual investor needs to do is know how to diversify well. So the word that I would know how to diversify well and in a balanced way, to diversify it in asset classes, to diversify it in countries, to diversify it in currencies, to know how to diversify that well so that you have wealth diversification is important. Do not think that cash is a safe investment. Cash is almost always the worst investment. So you have to think about that. You should think a little bit unconventionally. Diversify well, be humble, don't market time, and be conscious of the dangers of cash.
So I took the wording that he said there, and if you want to go and look at it, it's a TED talk. It's around the 26-minute. And he basically says diversify well in a balanced way. You need to know how to diversify in assets, countries, and currencies. Knowing how to diversify your wealth is the single most important thing. So let's take some mistakes that I've watched over the last 20 plus years. I've been personally doing this for 28 years. That, when it comes to diversification. So number one is I actually met a doctor in the last year or year and a half, and he had a house and he went to see his financial planner. This was in South Africa. And the financial planner said, yeah. But the first thing you must do is pay off your house. And I said to him, well, that's interesting. So you're going to have all your eggs in one basket, in one asset, in one currency, in one country. And I said, do you not find it interesting that over the last 40 years, the rand to the US dollar has lost 6% year on year for 40 years? So again, you've got all your eggs in one basket, in one country, in one asset, in one currency that's depreciating by 6% a year on average. When I say it like that, does that make sense? Or even better, I meet South African investors all the time. By the way, it's not just South Africans. It could be Australians, it could be anyone that buy residential houses and they don't, or apartments, and they're not cash flow positive. In fact, they're often you're chipping in every month to keep them alive because the costs are higher than the rent. But don't worry, I'm getting great capital growth. Rubbish. You're getting no income. You're actually putting money in every month. It's not an asset because it's costing you money. And on top of that, you're getting capital growth in a depreciating currency. Really? Now, I can give you all the research. Again, in the book, I created the Global Wealth Index so that you can compare currencies. And again, in Wealth Going Global, I go into this in module 2. But I literally share with people. It's a basket of goods. You can see 1983, 1993, 2003, 2013, and 2023. And your buying power as a South African has lost 92%. 92%. So let me give you another example. I owned a beautiful house on Teeston Island, Knysna, South Africa, one of the top 5 estates in the country. And this was the property. I bought it in 2013. I thought I was super clever. I bought it for $5.5 million. I got a mortgage for 80%. I had to put down money, obviously, plus the expenses, etc. So I invested about 1.7 million rand buying the property. I sold that property for 14 million rand. So yes, I'm clever, don't you think? I bought it for 5.5 and I sold it for 14. Wow, 10 years later, you must be so clever. Until I went and did all the maths. And what was fascinating is when I did the maths and I took into account, and I did everything. I took into account if I'd not bought the house and I had to rent, I would have spent the money somewhere else. I did all the maths. And what was really interesting is that the money that I invested in 2013 was $177,000. And today, when I sold, even taking into account all that profit, it's only worth $154,000. And so in dollars, I've lost $22,000. Pretty sobering. And then I think to myself, well, if I just invested that money in, in a commercial building in America, and it was earning me an 8% return and an IRR of 14 or 15%, that money today would be closer to $461,000, which means I've lost $300,000 buying that house. And without being crude, this is when I say the you-know-what is hitting the fan of reality, because you start to realize and you think you've got good assets until you do the maths. Mistake number 2. But don't worry, Scott, I'm going to diversify. I'm going to London or Bristol or Portugal or Manchester or Leeds. I'll tell you what, I'm going to go buy an apartment. I'm going to take all my money and I'm going to buy one apartment. And I'm going to have one tenant. I'm going to have one management agent, and I'm going to have one income stream. If that tenant stops paying, I'm finished. So yeah, I'm diversified. I'm in another country, but I've taken all my money and I put it in one apartment or one house. Doesn't sound so clever when I get real about it, does it? What about number 3? Oh no, but don't worry, Scott, I've diversified. I've gone to one company and I've invested in 8 different medical buildings with that company. Oh, really? Well, this guy literally, he's got 8 hospitals, but I've taken the company's name out, but they go through the Seychelles and they help people invest in only medical buildings in America. 8 buildings, none of them are paying, not one, because medical got devastated in COVID, because all the elective surgeries got stopped, and all the medical buildings are the ones that, those doctors are the tenants that ultimately, make money out of surgeries and stuff. And so a lot of them couldn't pay. Now, is medical ruined forever? No, it's not. Of course it's not. But it's cyclical. I've stood on stage for 10 years telling everyone how wonderful medical is. And then COVID came along and whoops, medical fell over. So, are you diversified? You're in 8 different buildings. Well, you're not. You're with one company. You're with one team. You're one income stream, one asset class, one country, and one currency. Oh, no, Raul, I was the one funding it. Of course I was. I was the one talking about medical. I've just said that. I was the one saying that medical is amazing. I didn't see COVID coming. I don't know if you did. No one else did. And the impact that COVID had. So the lesson I learned, there's no such thing as any bulletproof investment, not one on the planet, which is why you should diversify. What about, but I'm going to invest in just America, or just England, or just Australia. Well, in the last crisis, South Africa lost 37% against the US dollar, but the United Kingdom lost like 40%. And Australia is also here, and it also lost 46%. So it gets really interesting. It's not just the outlying third world countries that get impacted. And then people go, oh, well, that's fine. I'll put all my money in America. Well, okay. What about if you invested in 2008 and put all your money into American houses and that lost between 40 to 70%? Or what about Dolph DeRoos that bought 8 commercial buildings in Christchurch in New Zealand and stood on stage all over the world telling everyone, how wonderful they were, until he had an earthquake. And then the insurance wouldn't pay because they said it was an act of God. He still owned the mortgages, the buildings were condemned, and he went bankrupt. We've all learned the hard lessons. Diversification is the only way through. And so how do you diversify? Well, as an example, what I did over the last 12 months, invested in 10 different assets across 4 continents, 5 currencies, 9 different asset classes, and 10 different partners. That's an example. And it's going a lot closer to Ray Dalio, 15 quality different investments that don't move in tandem. And this is what we mean by diversifying across countries, currencies, assets, partners, and time. And so we call it Diversification 5.0. And what I love to do is do modeling and say, okay, well, we want a blend of capital plus, income. We want a blended yield. We want a blended return. How do we do it? What are the formulas? What do we look if we put some money here and some money here? What does it ultimately mean? And this is what we work on with regards to Diversification 5.0. And a good example of this is a guy called Chad. Chad started investing in Australia in 2011, and then I don't know the exact year, 2013, 2014, started investing in America, and has subsequently invested in multiple different countries, currencies, assets, partners, and time. He then introduced structured notes. And what's fascinating is that happily lives in South Africa, completely a global citizen with globally diversified passive income. And it all started with that mindset of diversification, but specifically focusing on predictable passive income. And so to finish off, we work a lot with a family office called Calio. Now, Calio only work with the wealthiest families. They only work with 60 families. They manage about $600 million. And we were doing an interview for our mastermind participants. They teach us every month about what's going on with the global market and investing. And this is what they had to say about, diversification.
This doesn't change, guys. Asset allocation, and this is not all of the asset classes we work with, but asset allocation is going to account for 85% of your return and is the fundamental building blocks of asset management and a financial plan that's going to, produce income or anything. But Anthony's going to talk to this, and this will give you very specific kind of views around the returns, the averages, and where we think the value lies.
So the purpose of this graph is not to go into it. Every single month, we go through all the different asset classes and whether they're going up or down and what's happening and why they're happening. But what I find interesting is that what Garth said, and he's the co-founder of Calio, he said 85% of your long-term return will come down to your portfolio construction. Basically, how do you diversify across the different assets and ultimately build your portfolio? 85% of your ultimate return. And they shared some stats with the mastermind members, which I find interesting. If you take private equity if you take equities, the stock market in the dark blue, and you take private equity in the light blue, whether you take 5 years, 10 years, 15 years, or 20 years, private equity has outperformed the stock market. If you take a portfolio, down the bottom here has risk. So from left to right is, this is low risk, this is high risk. And over here is return, low return, high return. Most people are over here. They're in high risk, low return. And if you look at this portfolio, this is what most people have. 30% bonds, 70% stocks. By adding just 20% of private equity, you can fundamentally shift this. And then I say to people, how much private equity you got? Or you invest in private equity. Back to our mastermind, we shared with what the 500,000 wealthiest people are doing in the world. And more than 50% of their portfolio is in alternative assets and private equity. How much is yours? If you take investing in the stock market, the average in the stock market is 9.5%, but investors that try and do it on their own, it's at 3.4 or whatever that number is percent. And so, I did this return on investment for someone, and I told you already about the gentleman who had been watching me for 10 years and done nothing and was getting an average of about 7%. And I showed him, because between ourselves and Calio, the long-term track record over 10 years is about 14, 15%. And he had $12,000 to invest. And I showed him over 1 year, it was worth $400 to him. Over 5 years, it was worth $12,000. Over 10 years, it was worth over $50,000. And over 30 years, it was worth nearly $1 million. And this becomes really important in terms of that power of diversification. So the fourth major pillar is structure. And this comes down to tax and structuring. And this is so interesting because when I deal with high net worths and sophisticated investors, they always want to talk about tax and structuring and getting it right. And they also want to remove the complexity. So many people have gone to 20 different financial planners and they've got all these little things all over the place. And their life is a nightmare trying to manage it all. And they just want simplicity. They want to just bring it all together with simplicity in terms of that process. And so myth number 10 is, you need to be careful. You go out and you kind of find the cheapest person and you go and invest in these small little tax havens, whether it's British Virgin Isle or the Seychelles or, I don't know, the Cayman Islands. And, you got to be careful. I know a guy that moved to Portugal and he's got his structures in the Seychelles, and the Seychelles is blacklisted by Europe. And so he can't get access to his money. And now he's He's retired in Portugal, but he can't get any money. So be very, very careful who you're getting advice from. Because often, in my experience, they sell you a little box, and then they only try and sell you stuff that goes in that box. Whereas you want to be dealing with someone that ultimately can look at the world, can take you as a bespoke individual and help you create the best solution for you and your family. And a good example of this is Manu. Manu was a successful entrepreneur. He started investing in property. He wanted to go internationally. And, when he started investing internationally, he was defrauded $250,000, $250,000. And then he found us and he started investing, etc. And, actually ended up becoming a shareholder. And I always say to people, sometimes it's not what you make, it's what you can save. I'm sure Manu would many times over want to avoid losing $250,000 again in that process. And so I got a quick question for you as we hit the hour. There's a lot of information I'm sharing, and I'm doing it quickly. How many of you are feeling overwhelmed? And I love this little picture. Many of you have seen it before. But someone said to me a couple of years ago, Scott, when you talk so fast, it's so much information. You're trying to share 28 years in 1 hour, and it's overwhelming. And it's like I'm drinking from a fire hose. So we went and found this picture because I love it. It sort of sums it all up. So can I ask you a quick favor? If you're feeling overwhelmed, and I started off the entire presentation saying, if I could share with you a way to be able to do it simply and safely, to do it 5 times faster, would you be interested? Can I have your permission to share from my experience? Because again, I've done this 28 years, some ways that you can try and do it that are far more effective than trying to do it on your own. So I can see Rocky said yes. Ilda said yes. So just the 2 of them. Okay, I'll share for them. Ankuru said yes. Okay, a couple more. Okay, I'll share it for the rest of you then quickly. Remember, we still got one more principle to go, which I'll come to. But I want to share this with you because I know at this point most people's minds are blown a little bit and confused. So remember Jordan. Remember, Jordan was a high net worth. He's 55 years old. He's worked very hard all his life. He's built a portfolio. He now wants to build globally diversified passive income, and he wants to protect as well. And remember all the things Jordan wanted, building a globally diversified income of at least $5,000, $10,000, $15,000, $25,000. He wanted to diversify across countries, currencies, and assets. He wanted to use his limited time to get effective results with predictability. You want to save decades worth of frustration and dollars to get the right knowledge for him and his family. You want a wealth protection, a plan B, and peace of mind. You want to be held accountable and have an accountability partner so that he can get results. He wants to have a family office, help him with the tax and structuring and the compliance and setting it up in an effective, hassle-free way. He wanted to create generational wealth for his family. He wanted to have a full plan in place, a wealth plan and an investor strategy sheet. And finally, he wanted to get results. Now, over the last hour, can anyone resonate with Jordan? Yes or no? Let me share with you how we've helped many, many, many Jordans. So I started off with 3 questions. What would it mean to you in 12 months or less to be earning at least $5,000 passive income without any hassle or complexity? I then said, how would you like a system which can statistically help you get there 500%, 5 times faster, safer, and simpler? And lastly, I said to you, could I make you an offer to show you how to do this simply and safely in 12 months? And I want to be very clear. There's no such thing as a get-rich-quick scheme. I'm merely showing you what others have done and giving you a system and a way to be able to implement it so that you too can get the results. So how do we do it? We do it through Diversification 5.0. We diversify across countries, currencies, assets, partners, and time. But it's all about building globally diversified passive income, which sits right at the middle. So I've got a fun little game with you because I like to make things real and I like to make things visceral. So I've got a challenge, and it's an extremely direct question for you. Just imagine you go to a doctor and he diagnoses you with a serious medical condition. And he literally says to you, no matter what, you have to lose 10 to 15 kilos as quickly as possible. Now, to be honest, I hope this never happens to you. But let's just imagine that it did. And it was an absolute must. You had to achieve it no matter what. It would either have a serious impact on your health or you would die. So it's non-negotiable. You have to lose 10 to 15 kilos. What would you do if you had two options? Would you go home and buy a home study course and hopefully do some exercises in front of the TV? Or would you get a personal trainer that arrives at your house, knocks on your door 5 a.m. every morning and says, "Oi, out of bed, Jordan, come, we're going"? Which one would you go for if it was a must? The home study or the trainer, the coach? Which one? Number two, for Rocky. Who else? Be honest with yourself. It's an absolute must. One, because I can't get up at 5 a.m. Trainer, the second option. Yeah, if we're honest with ourselves, most of us would go with the coach, trainer, because we know there's a much, much better chance of us getting the results. And so, you know, when you look at that confidence, and that's what we do for our health, the question is, shouldn't we be doing the same thing for our wealth? And so imagine if you wanted to build globally diversified passive income. And imagine if it wasn't a maybe or a should, it was a must. It had to happen. Now, for some of our investors, those that are super experienced, sophisticated, or even some that are just super motivated beyond belief, we've got just what the doctor ordered. We've got the home study course. You know, you need the right information and you need the right partners to be able to invest. And so you can literally go out and you can buy Wealth Going Global, which if I just show you very quickly, and tonight's not about Wealth Going Global, but if I log into it, I've literally got the course here. I can go through it. I can learn about my countries. I can learn about my currencies. If I click on, you know, on the country, I literally can go into it. Shane, just by the way, I can see those things are out of order again. You got the lesson and you got the materials. So you can literally go through it all. You can go look at the assets. You can go to the partners. You go to your time. And, you know, what's interesting is that, you know, you can literally build and walk away with your wealth plan. So by the end, you click on it, you go to download certificate, and you've got your own completely personalized wealth plan. And if I go, you know, literally down to my why, my what, and my how, if I go through here and I want my investor strategy sheet, again, this is not someone else's form, this is mine, because I've done my 6 modules and I literally fill it in and I walk away with my investor strategy sheet. So again, if you're highly motivated and you want to do it all yourself, it's all here. The knowledge all exists. You know, or you go along and you basically say, you know, well, okay, so that's the right information. Now I want the right partners. So what I'm good at over 20 plus years is going and finding the right partners. I've got experience, I've got networks, and you bring the right partner in. So we've gone to the top 15 asset classes around the world. We've literally brought the right partners. A good example, just last month, data centers. So just some interest, data centers have massive constraints in terms of supply. So there's very little supply in data centers coming into the market. But the growth for data centers based on artificial intelligence is doubling every 6 months. Now you think about that for an investor. Demand is doubling every 6 months and supply is constrained. It's an economic no-brainer. Now we had a guy from Singapore. He's got about $5 billion invested behind him. And, you know, he was teaching our mastermind members about data centers. That's what I mean. Not just learning about the asset class, but actually meeting the partners. And again, if you were to go to Asset Mastery, you know, which again is a module, you can go to all the different asset classes and meet all the different partners in terms of that process. So again, if you want to do it on your own, it's been built and it is there. But back to our doctor analogy, what we found is that most people want someone to hold their hand. You know, we've proven for over 2 decades that you can do it. and we've given you the knowledge to be able to do it. We've given you the right information, we've given you the right partners, but we believe there's a more effective option. And that's to bring a coach in to actually help use the system for you to build your portfolio. It's one-on-one support and coaching every step of the way in terms of that process. So people say to us, well, how? And we literally say to them simply, just like Uber revolutionized the taxi industry, or Airbnb, the hotel industry, or Netflix, the blockbuster, we just did exactly the same thing. We took our knowledge, we took all the different coaching programs I've been on and the different masterminds I've been part of. We listened to thousands and thousands of investors. We said, right, what can we do in the simplest, safest way to help people get results easily? And we realized that basically the investment space was broken, as we believe it is at the moment. So we fixed it. We first created, Wealth Going Global to give you the right information. And we created Asset Mastery to give you access to the right partners. But according to Harvard, you've got a 400% better chance, 400% better chance if you have a coach than if you try and do it on your own. So, there's so many people out there and they're trying to do it all on their own. And yet, if you just got a coach, you've got a 400% better chance of success. And then what's interesting, I've been part of Mastermind since 2011. And I found this video in the last 2 years. And it epitomized and it summed up for me why masterminds are so powerful.
Now, this is extremely predictable. Tons of research around it. Humans change 5 times faster in groups than they do with a one-on-one coach, consultant, or therapist in that case.
Wow.
So I started looking back at business models and people who had done this effectively over the generations. Masterminds aren't new, folks. They're not new at all. People have been doing this for thousands of years. And when you put a collection of people together who are all committed, all driven, and all so want to make the right changes happen, and you give them a leader to follow who's willing to get in the trenches with them, all of a sudden you start finding real, rapid life or business transformation.
So again, like Ray Dalio, I just want to bring that up. Humans change 5 times faster in groups than they do in a one-to-one coach, consultant, or therapist. If you've got a collection of people together who are all committed, all driven, and so want to make the right changes happen, and give them a leader to follow who's willing to get in the trenches with them, all of a sudden you start finding real, rapid life and business transformation. So I have people saying all along, what is a mastermind? Why would I join a mastermind? And I sort of give them this retort. And I say, well, do you want to leave your comfort zone? When was the last time you left your comfort zone? Most of us are in this peer group and they think small and they're stuck in one country and they're myopic and often quite negative. What about if you left your comfort zone and went and joined a group of like-minded people that wanted to be global citizens, that wanted to build globally diversified passive income, that were all aligned and had a leader to follow to make it a reality and to get those results? And for me, what a mastermind is all about is a group of like-minded people coming together on a collective mission to get results. And statistically, you'll get there 5 times quicker, simpler, and safer. And so let me tell you a little thing about the mastermind we created. Who's it for? It's for people who like personal development. So it's people who want to learn. Someone that knows everything, we can't help them. And they're coachable. It's for people that want passive income. At the end of the day, we're building globally diversified passive income. That needs to be the focus. And, it's for people that, own a property or already investors in the stock market or whatever. But at the end of the day, they've already got, a little bit of experience, at least in being an investor. In simple terms, it's people who want to get there faster, safer, and simpler with the least hassle and complexity. Faster, 5 times to be exact, simpler and safer with the least hassle and complexity. Who's it not for? Well, it's not for complete beginners. It's not for time wasters. It's not for negative people. And it's not for people with no capital. It's not for someone that, says, look, Scott, I've got no money whatsoever to get started. And, for me, that's the formula. I'm sorry, but I go on and on and on about it. You've got to diversify across countries, currencies, assets, partners, and time. So what is the mastermind? It's 5 simple steps. I believe there's huge power in simplicity. The first one is the outcome. So we get very clear right up front. The second is that we get clear on your starting point. So what is your current portfolio and how do we optimize it? Then we build you a plan. So we know where you want to be, we know where you are, and we build you a plan to get from A to B. And then most people in the world actually don't have anything. But for those that do have plans, even New Year's resolutions, the results are very, very small for the people that actually get results based on their plan. And so we've got a 2 rhythm that takes place over a 12-month period. Every month, we do accountability, mindset, and execution. Every month, we're checking in to make sure we get results. And then, point 5, it's all about investing. It's about learning with Callio. It's about learning from the best around the world. It's about investing, and it's about getting results. 5 simple steps. So if I go into that in more detail, the outcome is a 1-to-1 session with me. I'm certified and trained globally as a coach. I'll take you through the process. We'll get very, very clear on the top 3 outcomes you want to achieve and your top 3 measures, and we'll write everything down. What's interesting is that most people in the world are caught up in problem and drama, but we get very clear on your outcome. We call it the lighthouse approach. And I've been given phenomenal feedback over the years from people about this process. This guy is a coach for 27 years, and he literally said, love the process. In the last week, I was sent this voice note. Literally listen to it.
Hi, Scott. This is just a quick fan message. Just wanted to thank you again for our coaching call the other day. And then also wanted to thank you for the brilliant idea of that, sort of publicly putting in your goals in that Google Sheet. I see that the Google Sheet magically populated itself since the first time I saw it. And I must say the 2024 goals are very inspiring. And it's amazing to see. I found it incredibly supportive to see, people's just the amount of energy and the goals. And it's really inspiring. So just wanted to thank you for that. I really enjoyed reading everybody's goals. I haven't read all of them, but and somehow it's just really helpful. All right, well, have a fantastic day, and we'll see you in February. Bye.
Who would like to have the clarity for themselves, their top 3 outcomes, their top 3 measures for 2024? Then it's about your starting point, and this is about optimizing your current portfolio. So it's taking your current property portfolio, and as an example, there was a guy in Steve, he had however many properties, 7 properties, and I helped him look. It was costing him £750 a month. We helped him optimize the portfolio, and by looking at doing some different things, he literally went from a swing of minus £750 a month to £2,000 positive per month. Plus, he started investing overseas in America, getting better returns. And it's just an example. I do it all the time with South Africans. Should I keep this house? Should I sell this house? What are the options? Can I get better results overseas? We work with Callio, the family office, and they come in and they literally, I've told you already, they work with only 60 of the wealthiest families in the world. And they literally come in and they look at your tax, your structuring, your portfolio, your pension funds, your stuff that you got in the stock market, everything. And they help you optimize what you've got. They get clear on where you want to be and where you are, and they help you create a roadmap to get from A to B. And what's interesting, this gentleman, Niels, he had all the financial planners, he had a couple of properties all over the place, and he just said it's so nice to have it all in one place, all the different asset classes with one advisor that's doing it in a bespoke way just for our family in terms of that process. So highly, highly recommend what you can do with Callio. And then ultimately you've got the plan, and that helps you get from A to B. And again, there's so much clarity in a plan. And that's the execution. And every single month, that's the mindset. Most people are in a waste state, withdrawn, fearful, inability to make good choices, demotivated. But it's how to be in a toward state, happy, ability to think clearly, creative, see new opportunities. There's only 2 ways to be in a toward state. The first is get very clear on your outcomes. And the second is to be in a like-minded group, all pulling in the same direction. And so that's what we do. We work on mindset. We've got modules basically on time management, mental wealth, and flow. We've got an accountability tracker where we check in every month. Are you on track? We've got accountability partners. We've got an accountability coach. Everything we can do. We take the horse to water. We hold its head under the water to try to get it to drink. We use carrots, we use sticks. At the end of the day, you're still the one that's accountable. Let's be fair. But we try everything to help people get their results that they want. 99% of individuals who have a coach report them as helpful. 95% reporting them as very helpful. And then step 5, it's all about the investment. And this is where every single month, Calio comes in and they do a half an hour update on what's happening in the market. What do we need to know about the different countries? What's, the recent one this month? What's happening in the Red Sea? Is it going to have an impact? What's happening with the Israeli conflict? What's happening with interest rates going up? Where's inflation going? What's going to happen with the markets this year? Which asset classes should we be looking at? I love it. It's brilliant. And it's like having a TED talk every month on the most important stuff I need to know and having someone that we can ask questions to. Then, that's all about the portfolio construction as well. And, the different trends and everything we've been discussing tonight. Then it's the financial understanding. Every month I bring in an expert in one asset class or an authority. I don't like the word expert, an authority that's been doing it for 10, 20, 30 years. And they specialize in that space. And they teach us about the asset class. They teach us about the pros and the cons. But most importantly, they give us access to opportunities. And we get to meet the partners and say, do we like these people? Do we want to invest alongside them? So, we've done so many of them. And the feedback from people has been amazing. And as Neil said, it's so nice to be listening to all these things, to be learning and having the discussions with the likes of Calio. Of course, I don't know enough. I can follow their opinions, but I'm no longer completely in the dark. It's so liberating. And we talk at the mastermind level about learning the language of investing. Mind-blowing, very valuable, etc. If you want to go and watch videos, we've got a video of Neil's talking about his experience with Calio. Listen to it if you want to. What's interesting to me is that, and then people say, what happens after 12 months? Well, every single one of us should just be repeating the cycle. Every month, every year, we should be reviewing. So we go back to step 1. And that's it. 5 simple steps to get the results you want. And I remind you that simplicity is power. 5 steps. If there were 500, you wouldn't do it. 5 steps to help you get the results over the next 12 months. So if you do nothing tonight, you've got a less than 10% chance of succeeding, according to Harvard. If you do something like the mastermind, you've got a 95% chance of succeeding. Not my opinion, Harvard. It's interesting, Cynthia joined about a year ago, and she literally said, and she's a lady from America, worked in Hong Kong, now lives in Italy, and she literally said, thank God for the mastermind, the partners it brings us, and the exponential learning curve that it's gifted us. I mean, she's a single mom, she's a teacher, and I know many, many people have resonated with her story. So if you would like, the story of Cynthia, just put it in the chat box, or, just type in there Cynthia or type in there Niels. We can literally share with you their stories and you can watch them. I recorded them. They shared for about 15 to 20 minutes about their story. If you want to hear real people, real stories, and the impact that it's had on their lives, then listen. So it's 2024. And what was really interesting to me was that, we want to help people get results. We built Wealth Going Global. You can literally get, the top 5 countries, the top 5 currencies, the top 15 assets, how to find the right partners, how to build your portfolio over time. That's how to get all the right information. We've got asset mastery with, all the different 15 top partners and how to get access to the right partners in the different asset classes. And literally we say to people, there's only 2 things you need to know. You need the right information and the right partners. So if you want to do the home study course, there they are. But what we wanted to do with the mastermind was we had 2 choices. I've been part of masterminds where I paid over $50,000 and we can keep it like super top end. But then the problem is that if people are spending all that money to be part of a mastermind, then they might not have that much money to actually invest. And our objective is to help people invest and get results, get passive income. So the other option was, how do we get the right like-minded people in the room and make sure that we help people get results, make it more affordable, but ultimately, it's all about the passive income. And so, we considered $50,000. A lot of the masterminds out there are $50,000. I know I've personally been part of one. We decided, for all the reasons I said, we're not doing that. $25,000, that's pretty much the going rate. around the world at the moment. And once again, we decide we're not doing that because we'd rather have people to have more capital to actually invest. $10,000, you know, that would be, it's actually below market value in terms of the typical mastermind nowadays. But again, for us, we said, no, let's make sure that it's affordable for people so that the majority of their cash is investing in deals and getting them the results in terms of that process. So even though we're not going to charge you $10,000, if we did charge you $10,000, would it be worth it to you if you achieved your freedom goal? Just think about it. Would it be worth it to you if you achieved your freedom goal? What about, would it be worth it to you? And again, I'm not charging you $10,000, but even if I did, would it be worth it to you if it provided you with a peace of mind for you and your family to know that you were secure? What about if it provided you with a way to protect your wealth that you already have, that you work so hard for, your money that you work so hard for, protect it? Would it be worth it? What about if it saved you a decade worth of time? How much is your time worth to you? Would it be worth $10,000 to save you a decade? And what about if it did all of this and provide you with globally diversified passive income, which gives you peace of mind? Would it be worth $10,000 now? So, you know, the lesson I learned from Michael Honeysett all those years ago was we didn't try and charge a huge amount to go on the buyer's trip. And even then, he asked me for a discount. And I gave him that discount because I was feeling kind at the time. But, you know, we ended up becoming good friends. He became one of our largest shareholders, became one of our biggest investors. And as he said, you know, it was the best money he ever invested. And he would never have achieved it. He's now living in England. His daughters have the freedom. They've studied in England. They're living in England. He's literally achieved everything he wanted to achieve. And I learned a big lesson from that. Rather try and make it affordable up front, help people invest, help them get the results, because ultimately that's how you're going to win long term. It's Zig Ziglar's principle. If you can help more people, you know, you can have anything you want if you help enough people, other people get what they want. So you can have anything you want in life if you help enough other people get what they want. So on that principle and the lesson I learned from Michael Honeysett, we decided to make the mastermind more affordable. But we do have a constraint, unfortunately. Kelly, I work with you one-to-one. I work with you one-to-one. And so we only have 5 positions available. 5. It's not scalable. It's a one-to-one basis. There's only 5 options available for people. And so because of that, myself and Alex literally sit with people one-to-one and we interview them. And the reason we do that is because we call it an investor strategy call. And all you got to do is go to diversificationmastermind.com and just book a slot. It's free. You book a slot at a time that suits you and us. Obviously, it's an online booking system. But the reason we do that in the application call is we want to see what you want to achieve. We want to understand what your needs are. We want to make sure that we can help you achieve it. We want to identify the risks. And, you know, we want to see if you qualify. And I always say, because it's a human connection, you know, at the end of the day, you've got needs and we want to make sure we can help you. We've got no interest in people joining the mastermind if we can't help them. And equally, we want to make sure that you can qualify and add value and that there's a mutual fit, because the quality of the mastermind is only as good as the group. And one of the things I'm most grateful for is between Alex and myself and Shane, we've built the most incredible group. We've got people from England, from Ireland, from Italy, from Germany, from South Africa, from Zimbabwe, Zambia, Lesotho, Swaziland, Australia, New Zealand. It's just incredible. Mix between men and women, different age groups, anything from 45 through to early 70s, everything from auditors to accountants to highly successful business people, to sophisticated investors, to farmers, to teachers, to a plumber. Amazing array of diversity, both geographically, different genres, different backgrounds. And that is just, it's so amazing to have this group of people working together and learning together. But at the end of the day, we also only want committed people. You know, if you do make a booking, please, I really ask you kindly, I beg you, turn up on time, Your time is valuable. Our time is valuable. We make the calls free on purpose, but, you know, really, you know, if you're not sure, book a call, have a chat with Alex, have a chat with me. But please respect the time. You know, if you've got a thing in the diary, please turn up on time. And then, like I said to you, unfortunately, because of the constraints with Calio, the constraints with my time and the team's time, because it's a very one-to-one environment, we can only ever do 5 at a time. So, you know, we effectively, these applications, we let people know when we've got some spaces coming up in the future. And, you know, so if you are interested, I highly recommend you put your cap in the ring and let's have a chat and see if we can help you and if you qualify. Okay, so yeah, if you're interested in what clients have to say, I would recommend, I know a whole bunch of people put Nielsen and Cynthia down there. Literally, you know, there's videos, there's testimonials, there's written testimonials. You can go and see the experiences that people have had over the last, over the mastermind. Okay, just a couple of other bonuses that we chuck in for the mastermind members. They get priority access to me and the team. So literally myself and Alex work, you know, individually with them. They get access to our tax and currency partners. They get access to asset mastery. So not only the future, but all the ones in the past. So they literally would go in and all the different asset classes that are here: structured notes, multifamily, medical office, industrial, co-living, gold and silver, London residential, ETFs, private equity, first mortgage debt, data centers. It's all there in terms of the different process. And then the next thing is you get wealth going global in terms of that process. So, you know, we chucked that in for free as well. So you've got that, and you've got the bonus module with Clem Santa, where he talks about the global scenarios with the 2 different scenarios, the 10 flags and the probabilities, and then even South Africa's scenarios, flags, and probabilities. You get access to the Wealth Hackers subscription, and there's a huge amount there with Motivation Monday and Wealth Insights and, you know, knowledge and real people, real stories of wealth hacks and all the substance that comes with that. You'll get access to the best immigration. So if you want access to immigration, you know, in the different areas around the world, then we can help you with that. And then something that's quite new this year, which I'm very excited about, we're hosting 2 wealth weekends, one in March in the Winelands, Cape Winelands area, and one in at the end of August, beginning of September in the game reserves outside Gauteng. And we always get together at a wealth weekend. We try to do 2 a year. We'll have anywhere from sort of 30 to 40 people. And these are our sort of, you know, the people that really want to meet face to face. We're all a bit zoomed out. We've all had enough of this digital interaction. We want to meet real humans. We want to have real connection with real like-minded people. And it's all about people who want to be global citizens. And so in March, we're doing one that's being hosted by Garth Wellman from Calio and his partner Anthony. And they're going to be talking about the hard topics of money, all about asset allocation and diversification and all the hard components to money and investing. And then in end of August, beginning of September, Nicholas Liederman, who's the other co-founder of Calio, is going to be running one on the soft topics of money. So that'll be about generational wealth, social capital, impact on the planet, and, you know, all the things around social capital that are so important. And I know generational wealth is something that is critically important for everyone that's part of the mastermind. And then finally, we're starting to do buyers trips again. So in May, we're doing a buyers trip to America. You can come to America with me. You can meet the partners on the ground. You can literally see the assets and the buildings in May. In London, at the end of September, we're doing one in London. And in the first week of October, we're doing one in Europe. And so just like we did in the past, we've done 16 buyers trips, you know, and literally you'll get a discount off mastermind members. I get first access to the buyers trips. So again, how do you apply? You literally go to diversificationmastermind.com. It's an application call. We just basically want to make sure and understand what it is you're trying to achieve and see if we can help you. We'll assess if you qualify, and obviously there's got to be a mutual fit. I do ask that people turn up on time, and there's only 5 spaces that are available. We can't, you know, guarantee results because ultimately the accountability comes down to you, but we can guarantee your satisfaction. One thing about Shane, myself, and Alex we're very, very committed. And whether it's the carrot or the stick, we are very committed to helping you get your results. And I do remind you of this gentleman, that was getting a 7% return. And I showed him that even on $12,000, if you could get a 14 or 15% return in today's money over a 10-year period, it literally was, if you invested $5,000, over 5 years, you're getting a 250% return. So in today's money, you invest $5,000 to make $12,000. It's like a no-brainer. Over 10 years, you invest $5,000 to make $50,000 plus dollars. And over 30 years, you invest $5,000 to make nearly $1 million. I know it sounds too good to be true, but you just have to look at the maths in terms of the impact it has. And so, yeah, these are the buyers trips. We used to do buyers trips. We started them in probably 2010. And these are just groups of us that are in America. This is us in New York. This is us in Times Square. This is me with Dr. Dolph DeRuis buying properties on the steps of the auction in the last crash, having some fun in the Grand Canyon, at a show in Vegas, buying houses in Atlanta. That's actually Michael, and he bought this house with Ricky in Orlando, Florida, looking at multifamily, opening bank accounts, learning from the partners, so literally sitting around their boardroom table, learning from them, meeting the partner, getting to know who they are, different partners, different countries, different cities, having some fun on Beale Street, outside the stock exchange in New York, up in North Dakota where the fracking is and the oil, and even having some fun at Oktoberfest, not Oktoberfest, Halloween. So we did this for many, many years. We stopped it. We're now going back to it. And what is the mastermind? It's effectively the digital equivalent. It's a group of like-minded people that want to play as global citizens, that want to work with other people, that want to get results as quickly, as simply, and safely as possible. Their time is poor. They don't have a lot of time. So they need to be as effective and efficient in the smallest amount of time to be able to get the results. And, a good example of that, these are three of the wealthiest gentlemen in South Africa. They're one of the biggest shopping family owners in the country. And, rather than trying to go to America and do it all themselves, they came with us so they could come meet our partners on the ground. So why do we believe you should work with us? Obviously people have all the different excuses. It sounds too good to be true. I don't know how, I don't have the compliance. It's too difficult, ongoing management, time and effort, local real estate, it's too difficult, blah, blah, blah. Most importantly, people say, I don't have the time, I don't have the money, and I don't have the knowledge. Well, at the end of the day, when it comes to all three of those, if you don't have the time, the mastermind is literally created to condense decades into days. If you don't have the money, maybe the mastermind's not for you necessarily. Maybe starting with Wealth Going Global or Starter Pack or something, but there's always a way to get started. And sometimes I say to people, you can't afford not to do it. And then the knowledge, that's literally been built to give you access to partner with the right people and get access to the right knowledge. But mainly, why do you think you should work with us? We're the only ones that we're aware of that do global diversification. Everyone else will try and sell you a house in London or a medical building in America or structured notes. It's very isolated. We're the only ones that help you do all of it all in one place with different partners so that you can diversify and ultimately do what Ray Dalio said, 15 quality assets that are not tied together. And so, when I look at masterminds, if I didn't believe in them, I wouldn't have invested myself. I spent $14,000 to be part of Singularity University. I spent $25,000 to be part of Roger Hamilton's Entrepreneur Network. I spent $40,000 to be part of Maverick, which is the top group out of America. And that actually got me invited to Necker Island with Richard Branson. And I spent $50,000 to be part of Tony Robbins' crew. And that was me and him in Fiji as part of it. So I'm not telling you to do what I haven't done. I fundamentally know that this is a way to get results. And it's why I want to help you get results. And then I want to bring you to the final pillar, and it's team. The way it works at the moment, you want to invest in this offshore property and you go through a financial advisor, financial institution, a vehicle. There's multiple middlemen, there's multiple complexity, there's multiple costs. You have no idea what you're actually investing in. Generally going through the secondary market or stock market, and they're all correlated. So if the stock market goes up, they all go up or down. Or you want to go and invest directly in a building. Well, unfortunately, there's 16 different middlemen between you and your investment. There's very high minimum investments. You need large deposits. It's difficult. There's a lot of complexity, a lot of hassle. That's not even talking about managing the property, and they take a long time to be able to do it. You know, and if you want to do it, these are all the things you have to do. You know, country, due diligence, legal, compliance, management, KYC, you know, banks, tax, onboarding, deal tracking, secure, due diligence, etc., etc. Or you could simply use technology, you know, and there's 4 simple steps to be able to achieve the same result. But you have to do it through partnership. You have to do it. You know, we spend millions and millions of dollars finding the right partners, finding the right team. And, you know, myth number 8 is that you can go out there and you do it all yourself. You might be highly sophisticated in a country like South Africa, and yet you don't know how to do it in America, and you don't know how to do it in England, and you don't know how to do it in Australia. You don't know how to do it in Europe. And it could take you decades to learn how to do it in every country. Or you could literally partner with a group of people and a team to help you achieve it in days. And then lastly, obviously you get access to deals. You know, we're investing in deals. This one was exclusive to the mastermind. We did a deal recently before Christmas in Manhattan, New York, which was a 10% return in dollars. I mean, this one is a 7% return. It's an industrial building. It was in Phoenix, Arizona, and a 17% IRR. We got a deal in Germany right now. We got another deal, industrial deal in America. We've got one coming up in Austin, Texas. We've got a London property coming. So just exciting in terms of the opportunity we've got as investors to be able to invest. And then what's most important, people say to me, well, how do I get access to Callio? Well, previously no one had access to Callio. You know, they weren't on your team. It was virtually impossible, no matter how sophisticated my client was, to get them to meet with Callio. And yet, if you join the mastermind, you automatically get access to Callio. You get personal one-to-one attention in terms of them helping you. And my question is, on your team, would you not want to have a family office that literally is helping 60 of the wealthiest families in the world? And I kind of go, why wouldn't you? You know, here's another gentleman that talks about team. He was a highly sophisticated property developer in South Africa. He wanted to go to America. Rather than trying to go over and do it all himself, he came with us. He was on our investment committee. He invested in multiple deals with us. And now he's actually immigrating to America. And he is doing it on his own, but he's been doing it with us for over 10 years. And that's a good example of how to do it on a team. So why not join 4,000 other people that have got wealth protection, plan B, peace of mind, diversification, freedom, global citizen, empowering your children, immigration, and ultimately living a life unlimited. It is something that interests you, literally, diversificationmastermind.com, book an application call and see. If you're not sure, book it anyway, because then what you'll do is you'll talk to one of us, and if we don't believe you're ready for the mastermind, we'll tell you. But then we'll also give you other solutions of how you can get started, how you can get results in terms of that process. You know, you've spent the best part of 2 hours of your life here learning. That's the formula. Diversify across countries, currencies, assets, partners, and time. But at the beginning, it's all about this globally diversified passive income. And you know, if booking a call is too difficult for you, just type in their mastermind. Literally type in their mastermind, and one of the team members will reach out to you if it's something that intrigues you. And just by the way, there's a highly sophisticated lady. She's part of one of the biggest women networks in the world. And I just assume that everyone knows what a mastermind is. I literally said to her, oh, I assume you know exactly what a mastermind is because she's part of this huge network. She said, oh, no, I've got no idea what a mastermind is. So again, a mastermind is a group of like-minded people that are working together. They've all got their own individual goals. Because they're working together, they have a 5 times better probability of getting results, simpler and safer. And if you don't know what it is, book a call and come and talk to us, because it is statistically proven to help you get results better. I know I've been in mastermind since 2011, and all that we're trying to do is help you get a result. And that is why we created Diversification 5.0 Mastermind, to help people get results. If you want, you can do it all on your own. I've shared with you the 5 important principles. You know, if you want to, get a coach, you can do that too. Get a friend, get an accountability partner. But if you want us on your team and you want someone like me and Alex to hold your hand, and Callio to hold your hand and literally take you through this process, then join the mastermind. So that's it. 5 simple steps to get from A to B. And I'm not going to go through them all in detail again, but to remind you, to start off with step 1, you get a one-to-one with me and you get very clear on your top 3 outcomes and your top 3 measures. It's all about the lighthouse approach. Step 2, we optimize your whole portfolio. We look at your current properties. We look at your current everything else with Calio in terms of your overall structure. And we look to optimize it from a tax compliance structuring perspective. Do you have the right investments and the right assets? Is your money, your pension funds in the right place, et cetera, et cetera, et cetera. Then it's about a plan to help you we know you want to get here. You're here. It's a plan to get from A to B. And then there's the execution rhythm, mindset, accountability, and execution on a monthly basis, staying in it towards state, having the accountability and the execution. And then finally, it's all about the investment and the rhythm we run monthly, working with Calio to know exactly what's going on in the market, what's happening with the assets, how do we do portfolio construction, how do we learn from the best in the world, the best partners in the different asset classes, and then finally, how do we invest and ultimately get the results. That's it. 5 simple steps in terms of that total process. And I do remind you, according to Harvard, if you join something like a mastermind, you've got a 95% chance of getting results. But if you try to do it all on your own, you've got a less than 10% chance of getting results. And if you want an ROI, if you're the type of person that wants, well, what's the return on investment? Well, it's pretty staggering over time. And certainly something well worth looking into. So, remind you of the bonuses: priority access to me and the team, access to vetted tax and currency partners. You get access to asset class mastery. That itself is worth $1,997. Wealth Going Global, it's worth $497. You get both of them for free. You get Clem Sunter's Masterclass. You get 12-month subscription to Wealth Hackers. You get access to the best immigration agents. You get access to the Wealth Weekend, both in March and in late August. And you get first access to the buyer's trips with a discount off the buyer's trips. So we kind of chucked everything plus the garden sink at it, kitchen sink, whatever it is, because we want people to win. We want people to get results. And if you go back to Jordan, and I remind you of Jordan, what did Jordan want? He was a 55-year-old high net worth individual. He had worked really hard for his money over the years. He wanted to protect it, and he wanted to build globally diversified passive income. He wanted to have an accountability partner. He wanted to diversify across countries, currencies, assets, and partners. He wanted to have a family office, help him structure it all and make sure that he had optimized his current portfolio. He wanted to effectively make sure that his time was being used as efficiently as possible so that he could get predictable results. He wanted to create generational wealth for his family. He wanted to have a plan and to have an investor strategy sheet. He wanted to build a passive income of $5,000 or even $10,000 or $25,000. And ultimately, he wanted to get results. And if you resonate with Jordan, and if you want the same thing, then I recommend booking a call, going to diversificationmastermind.com, finding a time that suits you and a time that suits either Alex or myself, and booking a call with one of us. And I want to finish with some more pictures of buyer's trips, reminding you that, the mastermind is now the digital version of the buyer's trip. Although even saying that, our current mastermind members are like, hey, we want to do Wealth Weekends again. We want to do buyer's trips. So we're actually starting it again. But this was us again in Times Square, ice skating, not ice skating, what's it called? Ice hockey, Madison Square Gardens, outside the New York Stock Exchange, buying commercial buildings in America, buying houses, having fun on the trip, learning from the partner on the ground. You can notice the pattern. It's about having fun. It's about learning from the partners. It's about seeing the assets, and it's about investing. A bullfight in Oklahoma, another building we bought, sitting around a table with Dr. Dolph DeRuss and a whole bunch of investors. This guy, Paul Shalandra, amazing guy that we've bought a whole bunch of medical buildings and had a number of very successful exits with him. Another medical building we bought, a buyer's trip that we did in Hong Kong, near China, more buildings that we invested in. So the one thing, if nothing else from tonight, and I know it's late now, but I think you can probably pick up from my energy that we will do what it takes to make sure that you're satisfied. We will do everything. We will throw the kitchen sink at it because we want to help you get results. And all you need to do is to commit. So we promised you some bonuses tonight. If you wanted the Ray Dalio webinar or the TED Talk, or even Property Going Global, and Shane, maybe we can chuck in there the Niels and the Cynthia, interviews, and maybe even Abdul's interview. They're amazing interviews. Real people, real stories. They'll be under the bonuses in terms of where we're at. I want to finish with a saying: if you want to go fast, go alone. If you want to go far, go together. All night I've spoken about the way I did it. For 14 years, I tried to do it all on my own. I tried to learn everything. I tried to read every book and go on every course and invest in residential property. And it was just so hard. And then, the other option is that you can literally, go and learn from people and mentor them and get a coach, and it becomes a lot easier. Or you can literally partner with people. And that is the simplest, safest way that I've learned since 2011 to get results. And I strongly, strongly recommend it. So if you want to go fast, go alone. But if you want to go far, go together. Ladies and gentlemen, I want to thank you for your time. It's always an honor and a privilege for me to share this, my learnings, my lessons, my understandings. I deeply, deeply appreciate your time. I hope you've enjoyed it. If you do, let others know about it. I believe that we all have a responsibility to change the world as we know it, because we've all been indoctrinated to be like my dad, to work hard, to go to school, to go to university, and the results just aren't great. And more recently, it's people that are stuck in one country, in one asset class, in one currency. And I don't believe you should be that. I believe you should be a global citizen. I believe that you should be focusing on globally diversified passive income. Ray Dalio has given us the formula. Literally copy it. Good night, ladies and gentlemen. I'll stay here just quickly to see if there's any questions. I think I've answered most of it. Rail, I see that Shane has answered you. There is a way to reschedule till tomorrow. If anyone is interested in the mastermind and hasn't booked, I highly recommend that you go to that link, diversificationmastermind.com. If you're watching the recording, you can still go in and find a time. Otherwise, literally, you've got my details here. Don't send me an email because I won't read it. Sorry, I just don't like email. But if you send me a WhatsApp, we can connect. And worst case, if it's all too complicated for you, just type in their mastermind. We'll make life easy for you. For the right people, we want to go out of our way to make sure they're part of the mastermind. Like I said to you, it's one of the greatest gifts I've been given in the last 2 years is to be part of our own mastermind and the incredible caliber of people that are part of it. So thank you, everyone. Thanks for all the wonderful comments, and actually a number of mastermind members that are here. So wonderful to see you guys. And Werner, I look forward to you and me having our one-to-one and getting started properly. And to the rest of you, these lessons don't change. And the reason they don't change is that they're fundamentals, they're pillars. And if I've learned one thing about investing, the data can change, but the systems and the fundamentals don't. And that's why I like to teach the fundamentals, because they don't change. They stand the test of time. And with that, good night.